Good evening and welcome back to the Australian Stock Market Show. I am going to start tonight's show with a quote from George Bernard Shaw, who once said, "Progress is impossible without change, and those who cannot change their minds cannot change anything." Tonight, Dale and I, in our upfront, no BS approach to all things stock market, hope to challenge your thinking and just maybe help you to effect positive change in the way you invest, so you make better returns. For our main topic tonight, we're going to take a look at the recent announcement that Warren Buffett has $144 billion in cash and what that means to you and the stock market. Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. Good evening, how are you?
I'm fantastic.
That's great.
I say that every weekday, don't I?
Yeah, do you need to come up with a new one?
I do. I'm super fantastic.
Well, I think, I saw a little prickly guy tonight.
Oh, okay.
Echidna is his name.
Echidna. Echidna.
You laughed at my joke. That's the first one you've ever laughed at.
So it's like Bruce my kangaroo.
Yeah, that's exactly right.
Bruce and his harem. I've got 5 kangaroos that eat off my back.
He's big and scary.
Bruce is scary. He's got muscles. He could punch out Muhammad Ali, I reckon. He's big. He's big. But anyway, that's enough
That's
for that.
Australia for you, isn't it?
Cool. Well, before we get into our first segment for tonight, we do want to wish everybody in Queensland and northern New South Wales, making hopefully you're all safe and well, and hopefully nothing too much damage. But again, as always, we're going to take some live calls on the show. So if you do want to chat to Janine and I and ask a question, then this is your opportunity to pick up your phone and call us now. Now, the number you need to dial is 0392909988. That's 03 for Melbourne, 92909988. Now, to get things started, the first person to call into the show right now will get a free copy of my latest book, Accelerate Your Wealth. It's your money, your choice. Now, Janine, I know you and I are super keen for people to pick up their phone and get dialing right now.
While we wait for you to call, it is the second Tuesday in the month, and this means we have a look at the Australian sectors. So let's get into the charts.
Okay, on your screen now is the watch list of all the sectors, which is basically the same thing we look at every month, yep?
That's right.
Okay, so what is this telling everybody?
Well, you can see there that the energy sector is obviously the standout performer for the month. Now, we had said that it would be a changeable situation where the bottom dwellers would end up being the leaders in the stock market, which has pretty much happened, and we've seen energy take the lead in the market over the previous month.
Okay, is that because of oil?
Absolutely.
Okay.
And we're likely to see further rises based on what I've been watching and reading.
So is there still opportunity in the energy stocks?
Oh, definitely.
Okay, so there's my questions for our viewers.
Okay, excellent. Now, next one is materials. So we're up 2.5% for materials. Yeah. Now, I think with the material stocks, they've run hard.
Yeah, they have.
So, there may be a little bit of profit taking that we see in that space, especially with the big miners. We've seen FMG already come back, and BHP looks like it's coming back now. And at the moment is the preferred pick, but that doesn't mean that there's not more downside to come. So you've just got to watch carefully what's going on in that space at the moment. But long term, I think the materials are great.
Yep.
So consumer staples is the next one, and we're looking at down 0.46% at the moment. So you'd think in the current environment that consumer staples would be more defensive, but it's about the cyclical nature of that sector, and we have seen it run really hard. Stocks like Woolies have just gone so well over many years and made a low in around 2016 and then just continued to trade higher and higher. So it's natural to see a bit of selling coming around, especially with everything that was happening out of COVID. Initially, we thought that stocks like Coles and Woolies would take off, but they haven't. Because of all the supply chain constraints that we've seen. So the next we've got utilities, which is actually down 0.59%
for the month.
For the month so far. And utilities, I think, is a really good area to keep an eye on. It's been going quite strongly. I still see further upside, but there could be a little bit of consolidation in there. But it's about picking individual shares when you're looking at that sector.
All this is we're only roughly a week into all this, aren't we? Because really last Tuesday was the first of the month, wasn't it?
Well, it is early days, but the start of the month is a really good indication of what's likely to occur. So
it's a big move by energy, isn't it?
It's a big move by energy, yep. Healthcare, down 2.37. Now, we have seen some of the healthcare stocks try to rebound a little bit, but I'm not convinced at this stage that, especially with the likes of CSL, that's going to occur. So it's still a question mark there on CSL. Financials is down 2.7% at the moment. Now, this is the area that you and I are really excited about.
Yes.
Because we've seen quite a sell-off in stocks like ANZ, Westpac. We're now starting to see NAB sort of gently roll over. That's been the more resilient one of the stocks. And then we've seen stocks like Macquarie being sold off as well quite heavily, which did run on a lot longer than what you and I expected that Macquarie would do.
Yeah. Combank's been a bit weak.
Yeah, Combank's been a bit weak as well, and really strange looking formation on the chart at the moment. So we're just waiting for some really strong moves there in Combank. Consumer discretionary down 2.76%. So that's actually falling away. It's good to look for a few select stocks in that area. Industrials down 2.8% at the moment. I can't really comment too much further on that one at the moment, but communication services is a really
Telstra.
Good one to look at, because I think that's going to be a boomer medium to long term, but just at the moment it's being sold off, which, that's what happens from time to time. And information technology is down 3.64%.
Okay, so where should people be looking?
At the moment, I think go with what's running at the moment, and then just be prepared and be patient. I think this is part of what our discussion is going to lead into in the topic, is looking at some of the big stocks on the market, and I think that's going to be important going forward. That is all from us on the Australian sectors. Now it's time to get into our first email for the night.
Okay, our first email tonight is from Javed, who says, "Hi Dale and Janine, can you please have a look at Telstra and give your analysis on whether it can start an upward trend from this point? It recently hit my stop loss by falling below a weekly trend line. Now, fundamentals do not look bad for the upcoming period, but at the moment it is showing a little weakness. Many thanks and regards, Jazz." So Telstra.
Yeah, now this is one of the stocks I just commented on that just a moment ago, which I would have put in the stocks for the topic for tonight, only someone had already brought it up, which was great. So we get to talk about this one as a bonus. Now, what are your thoughts on Telstra at the moment?
Look, to me, I think Telstra's long-term bullish, short-term bearish. That's pretty much sums up my thinking of it all. I think right now it's coming back a little bit, as the rest of the market is, but I think it'll turn sometime soon.
In saying that, the short-term risk is it could continue to slide. That's
correct.
The problem
that's what I'm saying. Short-term is bearish, but I'm talking 3 to 5 years is bullish. That long term, because we do have a lot of investors that watch our show, but we also have some traders. So the traders would be looking at this going, okay, well, this is going down a little bit, so wait for some opportunity for people.
I mean, imagine if Telstra came back to between 350 and 360. It would be a nice opportunity after that, wouldn't it?
Yeah, absolutely. So what are your thinking on it?
My thinking is the same. I'm long-term bullish as well.
Okay, love the stock anyway. So now it's time we're going to take our first call, Janine, and I believe we've got Jeff on the line, have we?
Yes, I am.
Fantastic. Jeff, where are you from?
I'm from Booval.
Oh, fantastic, fantastic. You've got a question for us tonight?
Yes, I do. It's about Yancoal Australia.
Yancoal Australia. Do you own that stock, or?
No, I don't. I'm thinking of getting into it, but I'm not sure what it's going to do. It seems to be climbing up a little bit right now. Well, actually, other than a dip for today, but it's been going. It was up at way up in 2017 and 14 and 13.
Okay.
So I'm not sure what it's going to do.
What interests you about this stock?
It's coal. I kind of like coal.
Keeps you warm, doesn't it? Puts the power on.
Yeah, it does.
I think there'll be a lot of people that will be sort of giving you the negative vibes there.
Yeah, I know.
I like coal too. Don't you worry about it, Jeff. Are you looking for short, medium, or long term?
I'm thinking medium.
Okay, fantastic. Well, Janine's brought it up and we'll answer your question.
Okay.
All right then, Jeff. So looking at the chart, first of all, my eyes are drawn to that monthly chart, that bigger picture perspective, which it really has been held back for a long time. Looks like it may have bottomed out here and is starting the big move up. However, it's so volatile. You can see the last few weeks. Would you be trying to get in now, Dale?
Look, not right now, because I mean, a lot of energy is taken off, as you saw. I mean, 9% for this month, just in the last week, and energy is doing well at the moment. Obviously, oil, coal's another one. Obviously, at the moment, it is moving. So, to me, it's not a super liquid stock, but I think.
But look at liquidity; it has changed. You can see down the bottom there; it's actually really improved quite a lot, which is great. Still very low.
Yeah, now I could be wrong, but at the moment, I think I would stay out of it till it pulled back a little bit. I think it's moving pretty hard. And it's that move from about $2.50 to $5. It's nearly doubled in price over the last 4 weeks. So people have got in on that euphoria or whatever it was that's caused it to move, and then that'll exhaust themselves. And I think people will start taking profits.
So you'd be looking to see it pull back a bit. Could pull back to $4, $3, $4 something?
Look, I'll go with you.
$4.50, and then wait for it to move back up again.
Quite possibly it'll move back a bit, but then I'd have a look at it then. But I wouldn't. I'd only treat this as a real speculative type of buy. I wouldn't put a big major holding in it.
Yeah, and is it something you'd really, if you were looking for a stock, would you be looking there?
No.
Right. Okay.
That's my answer.
All right. Our next question is from Catherine. So that was a great question from Jeff. Good afternoon. I'm looking for advice for my current share portfolio. I'd like to seek advice on the shares I currently have. I have Whitehaven Coal and have had it since October 2021. Buy 2,200, is it?
Yeah, she
shares at an
2,000,
average price of $2.98. I am $863 in profit. Not sure if to sell or let it keep going, as I'm not educated enough at this stage to make the call to sell. I look forward to hearing from you, Catherine. All right, now
I've just noted a typo.
Really?
Yeah, you said 298 on the email, and you've put 292 on the chart.
292. How did I do that?
But your line's at 298, I think.
Oh, look, here we go. Can I fix that?
Okay, otherwise somebody will write in and say, Janine didn't get it right.
All right.
You know
keep
how
going.
fickle they are.
Yeah, I don't know where I got that from. Don't know what I was looking at.
Okay.
I started having a good look at this stock.
Now you can talk about it.
Whitehaven Coal is looking really nice,
looking
but
very
I think it's
I
gone.
like this one better than the last one.
I think it's actually gone for now. Like, I think there's potential for another, maybe another 5-10% upside. But I think beyond that, it might slow down and trade sideways. It's extremely volatile. And after these big weeks where you see a huge rise, are you going to jump in after that? It's the same sort of story.
Same sort of story. I'd wait for it to come back and see what it was doing. But, I mean, it is a better stock than YAL. So I do like it, not so bad.
And look, I mean, the other part of this is that she was asking us for a decision on that about what she should do.
Why would she be selling right now?
But she also needs to be thinking about, when getting into anything, to have an exit plan at the start.
Correct.
And that's the problem, isn't it? When people buy shares, they feel like they're just hanging there.
So you could use a trend line on this stock right now, yeah?
No, it's a bit too steep. So it's blown away from that trend line. It's way too steep. There's a nice trend line under that rise, but then it's just blown away from it. So it's got a long way to come back to the angle of that trend if we have a look at it. So it's not something that you're going to be able to do. That's all the way back to where she potentially bought it.
So what does she do?
So it's really a decision for her about how much she wants to give away from the top, to manage that risk on a stock that's blown off like that, or just wait to see that trough come in that Dale was talking about, might come in, and then... But what are you risking in doing that?
That might give her a point.
And then a move back up again.
Right now, I wouldn't be worried about it.
So she needs to grab your book. Did she say she had your book?
I don't know.
That was a good point, isn't it?
Maybe she should.
There you go.
Cool.
All right. Thank you very much for that question, Catherine. And now we've got a caller on the line. How exciting. Have we got Hass on the line there?
Yes.
Fantastic. Have I pronounced your name correctly?
Yes.
Oh, wonderful. And where are you calling from, Hass?
I'm calling from Melbourne.
Melbourne. Oh, my goodness, we should celebrate.
No, we hardly get
Have we got
anybody
music
from
for
Melbourne.
that? We could play someone from Melbourne. Great. We've got a stock. You've got a stock to talk about for us to talk about tonight. Would you mind sharing with us what that stock is and what your question is, please?
Yes. So first of all, I love your show and the banter. So it's good. Then a lot of valuable information. So the stock that I have is the Brain Chip.
Okay.
And I bought it. It's a fruit stock, but I bought it as a very long-term thing, like sort of set and forget type of thing. But in the recent sort of start of January, it just spiked up. But I didn't sell, so even now I'm 100% ahead of it. But my question is, if something like that sort of happened to a stock, would you suggest to sort of, take money, like take profit and then sell it, or just stick to the long-term plan?
That's a really good question. Thank you so much for that question, Hass. And we'll get right to your question. I just want to have a look at the stock, though, and see what it's done. So, Dale, what do you think about this?
Well, Hass said I think he said he was roughly
Long-term.
about 100% up on it at the moment, which means he would have bought it somewhere around that 50 cent mark.
Yes.
Because it's currently around $1 mark. So
Gee, it's fallen a long way, though.
yeah, and it really is. It's, if you're a long-term sort of buy and hold person, then these sorts of moves are relevant to you because you're actually looking at fundamentals saying, I like the fundamentals of this company. It earns good money. It's got good growth potential. Maybe it's got good dividend yield as well. I like the long-term potential. So you forget about the price fluctuations of this. But if you're somebody who's not long-term, and to long-term
Well,
for
even
us
someone
is,
who doesn't want to have that sort of volatility in their investments, if they don't want to have that
that's
downside
what you've got to
risk.
suck it up. It really is. It's part and parcel of long-term investing.
Yep.
You're going to have stocks that are going to run for you, and that's why they talk about balancing.
A lot of people think that initially, especially for stocks like this, but what people might be surprised to learn is when you're talking about the big stocks, if you look at the monthly chart, you can trade the stocks on the monthly chart and still use stop losses and manage that downside risk without having, this sort of volatility. I mean, look at the pullback.
I would have sold it already, but...
Yeah, well, look at this.
my thinking.
I mean, it's down 56% at this point. So what you're saying is if he's holding it at this point, make the call. I mean, I guess I would, if it was my stock, I would continue to hold it at that point. There's a gap up here on the weekly chart. There's a potential that it may come back up and try to fill that gap at some point, but then you're risking all of your profit. I always say take your capital off the table. That's my theory.
Okay. All right. Well, moving on, we do have an email from Nigel, and Nigel says, good afternoon. Thanks again for the show. I've read both Dale's books and picked up a few good tips and a basic trading strategy to work with, which in conjunction with your show and Janine's wonderful insights has given me the confidence to start trading. Hence, I'm all in on stocks since late February and have lost about 50k so far. Not a good start, really. I chose 12 stocks that have fallen approximately 5 to 15% plus over the last 2 weeks. Most are in the red but are slowly coming back. A few in the green and a couple on the fence. Now, my maximum stop loss is 20% on each, fitting in with the theme of tonight's show. One of my stock purchases was ZIM. Please share your thoughts on this one. I chose this stock because gold is becoming popular again. The charts show a green trend line, a nice yield, and in the past few years increased net profits. Nigel, that's a good question. Well, sort of, it's a lot of a question.
It's a long-winded one, isn't it? Look, I would say, looking at this share, it's very liquid. You can just see on the chart there that even the monthly chart, there are gaps everywhere showing how liquid this stock is.
So is he following what he's taught about in the book?
Well, for a start, he's buying something that's high risk.
He's buying high risk, so that's not in the book. So I'm just working out. Would you have put all your money into stocks in one hit, basically?
Oh, if you're starting out in the stock market, you should use a small percentage to get started and then prove the strategy to yourself. Even though we might talk about, okay, what's your total capital and what can you invest? As a learner, your total capital should be significantly less than what you could invest in the market.
And stocks going down 5 or 10% after you buy them, you have to just wear that sometimes because that will happen. But I think, in my mind, with the his strategy, because he said, I'm all in. So basically he's picked 12 stocks pretty quickly. Now, I've never done that in my life before, and I'm not sure I'm pretty sure you haven't done that either.
Well, I don't know how he's managed to do that.
I don't know how he's
there were
managed to do that either.
so many stocks falling recently.
Yeah, so how do you get buy signals on all of those? So that's where I think we need to adjust a little bit about what he was actually talking about. But right now, I don't really like this stock, and I'm not sure why he bought it, because I can't, it's
Look,
sort of...
I actually think that it looks like a boomer. I'm probably going to go against you on this one because of how strong that rise. So often when we see those sort of consolidations, stocks can go vertical after that. Lower liquidity stocks can go vertical after these moves. But the key is here having the right stop loss to protect that downside. And so that's really a decision for him to decide, he's talking about 20%, but does he really have to risk that much, in the market where the current price is? Well, the next low back there is about 23%.
Yeah,
Would you want to risk that much,
20% is a bit too much, but
that's not what we talk about.
As I said, I don't think he followed the strategy of our book, but we've got another caller on the line, Janine, and I believe we've got Michael there, have we?
Yeah, mate. How are you going?
Good, buddy, good. Where are you from?
Hobart.
Hobart, sensational. I just love going to Hobart. We've got a few of our lovely students down in Hobart and graduates. Love going down there and spending some time in your lovely city. You've got a question for us today?
Yeah, it's about ARF, Arena REIT.
Yep.
My son bought into it back at the start of December for $4.43.
Yep, $4.43. Yep.
It's his first ever go at the share market.
Yep.
The problem is, like, as soon as he bought it, everybody's been telling him it's a rubbish stock. So I turned around and said, well, we'll give the professionals a ring and see what they think.
Well, if you look at the stock code, it's called ARS, so say that one fast and you'll know what it is.
F for Freddie.
That's ARF. Oh, they've typed in ARS for me. Maybe they had a premonition.
It's not an S word. It's an F
not
word.
an S word, Michael, but Janine will know. Cool. Good luck in Hobart. Thanks for calling in, Michael. We'll answer your question now.
All right. So looking at this chart, I'm glad we got it sorted. We're looking at a REIT, which, this has done incredibly well.
Yeah, it looks like it's done well. It's not an ARS stock, is it?
Yeah, look, who cares if it's not an exciting mining stock or whatever these other people are talking about. I think his son, if he's picked this one and he's in it, was he actually in it? Did you?
Yeah, he said he bought it in December. So, So
look,
you sure we got the right stock code, ARF?
We have the right stock code. He said Arena REIT.
Okay, that's fine.
Okay.
I'm just making sure.
Yeah, ARS is not even...
I'm the one that gets yelled at,
Look, I'm sure he'll ring back if it's not the right stock.
Cool.
So looking at this, we can see there that the stock has basically gone sideways and since then, but it still looks nice. Look at the beautiful trend that we can see on the share.
Beautiful, I like it.
The great thing about these sorts of moves is that it's really easy to set a stop loss under a stock that trends well with a trend line, or even there are other rules. So would you want to risk it?
And for a first purchase in the stock market.
For a first purchase, it looks like a really
I think he's done well.
Low risk type investment. So I'm just looking for one of your trend lines up under there to see if I can get it under there.
It's just trending perfectly, isn't it?
Yeah. Now, I mean, if it actually broke that, it would give you a really clear sign of what the risk is to the downside.
I think Michael should give his son a beer and congratulate him.
But the only thing is that the guys will be expecting it to punch the lights out, what the ego side of thing does. So if it doesn't...
they're from Hobart, they're nice, they're not like that.
Yeah, it's not the point, is it? All right, we have another caller on the line. We have Mohammed, and he's wanting to talk about another stock tonight. Mohammed, where are you from, please?
Hi, Janine. I'm from New South Wales, Bankstown.
Bankstown. Oh, wow, fantastic. Look, how long have you been there, Mohammed?
Almost 12 years.
12 years, and do you like it?
Yes.
It's lovely?
Yes, I love it.
Oh, wow,
Yep.
Fantastic. Well, look, I can't say that I've been there it's been a long time since I've been there, but you've got a stock for us tonight and a question.
Yes, correct. So I'd like to ask you and Dale to comment about this particular company, REH. And my plan is to take a position for 12 months. If I got chance, I will in at $17.50, stop loss $15, and take profit $26. What is your comments about that one?
Okay, Mohammed, that is great. Are you a short-term investor or medium to long-term?
It depends on the company.
Okay, fantastic. Well, thank you so much for your question. We'll have a look at the charts for you right now. All right, Dale, did you get those numbers?
Yeah, I did, but I'm wondering how he's calculated those numbers and why he's done that. And the other one was like 12 months. Why 12 months?
Yeah, well, he's looking for it to turn up to trade to around $26, didn't he say?
Yeah, but have you ever set targets like that before you bought a stock?
I always look at what the upside is and consider that, but I'm not necessarily saying that we're going to get out at a particular level, because that you need a proper rule for the rule to tell you that when it gets to that level that it's likely to go down.
If you look at that, he said 1750. He said if it gets down to 1750, he's looking to buy at that. So, but if it goes down near that, if it goes below that 1721, it's probably likely to go a long way down. So right now, I'd be staying right out of it.
And waiting for it to start moving back up. Yeah, look, I'd agree with you on that. I'd like to see a nice strong move back up and even above $20, $21. So don't try and catch a falling knife.
I don't like
that's
his strategy.
dangerous.
I just don't like his strategy.
Yeah, just be careful. That's all we'd say. Well, Dale, it is now time to get into our main topic for the night, and this is an interesting one in that we chat about Warren Buffett having $144 billion in cash and what that means.
If you say that fast, it's not that bad, is it? We'll totally agree that it's a super interesting topic, and we often see Buffett statements in the media which on the surface implies one thing, that they hold a lot of cash, but in reality it does not really say that much.
Absolutely. Now, recently it was announced that Berkshire Hathaway is not fully invested in stocks, but is holding $144 billion in cash. So what does that mean? Is this suggesting investors reduce exposure to equities and increase cash holdings? Further, what does this imply as to Buffett's thinking on the stock market?
So true, so true. Now, we know Buffett is famous for saying, be greedy when others are fearful and fearful when others are greedy. And investors do exactly the opposite. So is having $144 billion, I can't even say that, $144 billion in cash important in context with the market's recent decline? So the question we need to answer, Janine, is whether holding $144 billion in cash is really significant, because you have to admit that number sounds huge by anyone's measure.
Yeah, it does. Well, it was certainly big enough to reach the headlines to get the attention of investors, but is it significant in terms of portfolio management? Being focused on the amount without context to the portfolio can be misleading. So what is important and relevant to understanding this figure?
Too right. Now, today Berkshire Hathaway is valued on the stock market at approximately $715 billion, which is a jaw-dropping number. But the question is, so is the $144 billion in cash, when Warren Buffett has said he pledged to hold at least $30 billion in cash and equivalents, but prefers to be 100% invested in cash and equities? So the current cash holdings well exceed his preference at time when shares are the shares in it are valued around $350 billion of Berkshire Hathaway. Now, it suggests that instead of saying $144 billion, that if the headlines had said Berkshire Hathaway has reduced its exposure to equities and increased its cash holdings, a hell of a lot fewer people would have taken notice to the announcement.
That was a mouthful, wasn't it?
That was a huge mouthful.
That is why we always say it is important to not take the news out of context, as increasing cash holdings in a portfolio is not out of the ordinary. Further, if an investment company is holding a large amount of cash, this should not concern you if you have a good investment strategy of your own. It also does not mean that you should change your cash holdings or attempt to have the same exposure to cash.
So true. What is really interesting is how Warren Buffett often says he would rather be fully invested, but right now Berkshire Hathaway is holding more cash. So at times the company will increase its exposure to equities, and at other times exposure will reduce, so they have more money just sitting there ready to invest. Now, what is also interesting to note is the timing. As the US market fell, more money was moved from equities to cash to prepare for better opportunities.
Now, any investment company or managed fund has their own investment strategy and mandate that stipulates how funds are invested, including the way they invest, the weighting, the number of stocks they hold, and the types of assets that they can invest in. What I want to highlight is that this is not necessarily relevant to how you should invest.
Now remember, it's much harder for a large amount of money to move into and out of the market without restrictions, and so this influences the strategy they set, whereas the advantages for you is that you can be nimble, and this means you have more choice and more freedom, as you do not need to spread your funds as wide. Now, less stocks in your portfolio means less time to manage it and keeps your costs lower. And also, your process for selecting stocks can be much simpler, making your portfolio easier to manage.
The ability to move cash or move to cash should be valued highly on your list of investment criteria, and is a strategy even Warren Buffett uses. But you can be much more flexible in how you do this. For a start, you are not answerable to millions of investors when making decisions. You can go from fully invested in stocks to fully in cash when the market risk increases significantly. In short, you manage your risk by going into more cash, and in doing so reduce your risk. And like Warren Buffett, think of this as being strategic, as it frees up cash ready for better opportunities. and it is safer to be invested.
Now, I know, Janine, that I'm always amazed that people invest without really understanding that what they're invested in and how to manage their risk. It really is so important to read the information provided when investing in funds or ETFs and ask the questions.
Absolutely. If you are armed with knowledge and a portfolio strategy that includes proper rules to buy and sell, combined with good money management, you have a higher probability of being successful. More than that, you will be ready when the market turns. Having rules means the stocks you hold will tell you when it is time to buy and sell, and so it's normal to have a portion of your portfolio in cash, with that level increasing as the risk of the market increases.
So true. Now, I think we need to give everyone an example of what we're talking about so they can really understand what we are saying. So let's take a look at the chart of the All Ordinaries Index and some of the biggest and best stocks on the market, as there are some great opportunities setting up right now that you need to be ready for. So Janine, let's go to the charts.
Yeah. Look, I think when we're looking at stock markets that are falling, often people are thinking that they're trying to buy yesterday's news.
Well, they do. They try and buy yesterday's returns.
Yeah, and are not responding in terms of what the market is doing, and that's part of the issue, isn't it?
But I think one of the things we forget about with Buffett, he's not a fund manager.
Yeah.
Berkshire Hathaway is not a managed fund. They don't manage people's funds. They're a company that buys other companies. And the only way to get exposure to that is to buy Berkshire Hathaway shares and become a shareholder, where you pretty much have very little say because you're a minor shareholder. And I mean, who can pay nearly $450,000
look, he's really smart the way that he's
for
done
Class A share? So he's done sensational. I'm not saying that, but I said he's not under the same rules as any fund manager. He's completely different what he can do. So he chooses it himself. But I digress.
Yeah, and I guess what you're saying is that we constantly talk about people being, investors, whether it's investors or traders, are going to have variable amounts of cash in their portfolios at times.
Correct.
Whereas some investors get really stressed if they've got money in cash and they get itchy fingers and want to actually press the button and go and buy something.
And a lot of fund managers have to be pretty much fully invested in the market. That's their mandate, which you talked about.
And I can't believe how many people don't actually realise that. So look, if we look at the stock market in that context and think about that, as the stock market's pulling back, in theory, would you be fully invested right now?
No. We're not fully invested in it
that's
right
right.
now. So why would you be? And that's where a lot of people misunderstand Buffett. They think he's buy and hold, never sells. That's not true. Buffett will adjust his portfolio based on the risk of the market. So what he's done at the moment is really normal. So he's reduced his equity holding because a risk has increased, which is what you talked about. So now...
Well, he just can't find the investments to suit the criteria, because fund managers have certain criteria. As an individual should have criteria for how they do the selection. So we can see on the chart that, with the portfolio, with the market moving back or a client's portfolio moving back, that you would be selling. There would be signals to sell all the way through this period. It's just a natural move in the market. So I guess that was important just to illustrate what's happening on the stock market in relation to where people's cash position would be.
Can I add one more little thing?
Go for it.
Buffett's not a technical analyst like us, but he's more fundamentals, and fundamentals do change, and his criteria for owning a stock will change with those criteria at times. So therefore, will bring the need for him to sell stocks that no longer fit his criteria, which is really what you were talking about a little bit earlier. So right now, obviously, that's happened for him, and now he's got cashed up, ready to buy when he can find stocks.
And look, I think it's important to have a look at what's going on in the stock market in context with some of the big stocks on the market. So you and I identified that we thought that the materials and the energy sector would be a better area. We thought that telcos would move up, which they did for a time, but even telcos is pulling back now. Telstra's coming back. We're seeing Wesfarmers, just a quality company that's pulled back significantly. I mean, who'd have thought that Wesfarmers, if we look at this chart right now, would be down around 30% at the moment.
It's huge.
So it's huge. Now, this is actually exciting because if you've got some money in cash, you can look at the top 20 shares and don't have to put your money into these, penny dreadfuls or high-risk shares. Look at the ones that have fallen significantly and and look at that in context, not just thinking, oh, it's a top 20 share, I'm going to jump in. But once it actually turns around and starts moving up, there's going to be some opportunities to get them
really do like
at a lower
Wesfarmers.
price. Yeah. So that's I was only allowed to have 3 shares, and that's one of mine. Telstra would have been another one. I was going to pick BHP, but we talk about that a lot. So I decided find 2 other shares on there that have potential for the future.
So Aristocrat, yep.
Now, you might be surprised about this one because it can be a little bit more volatile.
Should I say, ooh?
Yeah. So 32% decline. It's the same sort of order as Wesfarmers. But, I'm thinking eventually when this thing stops falling and it starts to turn around, there will be some opportunities to pick it up. So that's Aristocrat Leisure is another one.
Yeah.
So this is why right now it's important to have some cash in your portfolio. Now, looking at ANZ's a great bank. There's further downside risk in the short term, but whereas ANZ, we might be able to get a trend line down there at some point, which would be lovely, even on the monthly chart, and possibly down the track we'll be able to find something on the weekly chart when it bottoms out and settles down. I just think that that's going to be an opportunity as well. So it's one of my preferred banks. What was your preferred bank, actually? And it's still unfolding to the downside, so be patient.
Yeah, and look, I think you're right. I mean, to me, a lot of people have misconceptions about Buffett and what he does. People saying, well, he's buy and hold. No, he's not. He isn't.
He buys big quality companies, but he does buy some smaller ones, having a look across the portfolio. But in the context of what we talk about, we would never suggest people put small amounts of money into individual little stocks, because the whole concept of what he's working on is that one day, that starts off really small and over the long term it's going to be really big. But you'd have to be willing to go through all those ups and downs, and most investors don't have the internal fortitude to do that.
Correct. He doesn't believe in diversification, and a lot of people say he's got a concentrated portfolio.
Plus, imagine the size of his team that he'd have.
Well,
does an individual have that sort of resource?
Well, that's true. But the thing is they're the misconceptions that people have. Buffett has a smaller portfolio in numbers of stocks.
44, I think, on last count.
Apple was nearly half of his portfolio because he was buying that in the early days. So that's
a huge part.
And people are saying, well, you need to rebalance and diversify, and you need to have so much in each different stock. He doesn't believe in any of those sorts of things. So right now, he's done a smart thing by reducing some of his holdings to having cash ready for the next run up. That's what he's doing. So that's what we suggest people do in my books, etc. We're telling people to be more active.
Hold less stocks than that.
But hold less stocks.
It's simpler, easier to manage for an individual, isn't it?
Yeah, absolutely. So I like the stocks that you've brought up, and I think really important for people to understand is, and we really were serious when we said at the start of this topic, is that Buffett says, buy and doom, sell and boom. That people do the opposite. How long have we been? 25 years or something we've been doing this, and I've never seen most investors. They always do the opposite of what Buffett's. They're really greedy when they should be fearful, and they're really fearful when they should be really, really greedy.
Yep.
And there's a number of things like that Buffett talks about that people don't follow. So in summing up what we're talking about today is it's okay to go to cash. It's okay to go to a high level of cash, whether that's 20% of your portfolio or 50% or even more. So it's okay to do that. It's even okay to go to 100% in cash if that's what the market or the risk of the market is high.
And the stocks are telling you.
And the stocks are telling you, and they've given you sell signals, but don't make knee-jerk reactions and emotional ones. But right now is the time to be looking for good stocks, just like Buffett, just like Janine and I were looking for good stocks. So it's okay to be more in cash right now and getting ready for the next run up. So I think that all sums it up. What do you reckon?
I think you've done well in summing that up.
Okay, well, that's it for our topic tonight. Now, before we get into our next email, I hope you have your phone ready like those other people and been patiently waiting for the opportunity to call into the show and ask Janine and I your most burning questions. Now, it is time to get dialing. The number you need to dial is 03 for Melbourne 92909988. That's 03 92909988. So get dialing now. We're champing at the bit to answer your questions.
That's right. And while we wait for you to call us, we will get into answering the next email. So call now, please. Our next email is from Bevan. Hi, I've read in the media that BHP shareholders will receive an in-specie distribution of Woodside shares under the arrangement between the two companies. Do you know what the formula is for working out how many Woodside shares will be distributed for each BHP share held? Many thanks, Bevan. So I think it's a learning thing that he's asking the question.
Isn't it the other way? Isn't it Woodside shareholders get BHP shares?
You get shares
I did a report on this
in the
ages ago.
entity, right? So BHP is actually, they've created this company,
Yeah.
and they're going to get some shares in
Yeah,
it. So, you know, I can't remember which one it is now. I'm confused myself. So that one of them, I think it's Woodside, has 52% of the equity, or Woodside shareholders have 52% of the equity in this company, and then BHP has 48.
Well, I did a recording on this when it first got announced. I know I did I think it was a podcast. I think I did a podcast on it. So, but where do people, I mean, if you're a BHP shareholder or Woodside shareholder, you would have been notified. So that's
well, you're going to get something that tells you exactly what you're going to get.
Okay.
If you're a shareholder. If you're not a shareholder, you can still do some research and go and have a look at the Investor Centre on the Woodside website or the BHP website and have a look there to see the information there. They usually have a whole lot of information for investors about what's happening. And if that if you can't find something, try ringing the company. Sometimes big companies like that will have someone there for you to talk to.
Or go to the ASX in the announcement sections if you go there, which we've shown you how to do a few times. But if you are a shareholder of either company, you should know that it'll be written down on the documents you've got. But do as Janine said, go and do some research. Cool.
All right.
Now we have a question from Shay who says, "Hi Dale and Janine, I was just wondering if you could look at Mesoblast. I made a tidy profit off this stock as it rose through 2020. Unfortunately, I bought the hype and bought in again, but close to its all-time high. It's since dropped 80% or around 80%. Do you see any positives to this company and its fundamentals, or should I cut my major losses? Love the show. Thank you, Shay."
Gosh, Mesoblast. I mean, I think back to when this share was trading up here, because I did watch it for a while in 2019, and it was looking brilliant. And then when the COVID crash happened, it actually fell way below that 2018 low. But look how volatile it's been since. It's just changed its personality, and then has been in a long-term decline. So,
well, I'm wondering why she hasn't sold already, because, you know, if she's bought in again through FOMO, which she said, right? Now
I think it was very brave of her to actually say that.
I do
be
too.
honest about it.
Yeah, absolutely, because, you know, people do need to, you need to be honest with your investment and yourself and what you're actually doing. So if you bought because of FOMO, then, you know, it's great. I think it's fantastic that she's come out and said that. But this is, we're talking about that high there was October 2020. So we're talking about, what is it, 13, 14 months of downward move. So what's been happening
but when
here?
a stock falls and when you don't have an understanding of technical analysis, you're just hoping that the stock's going to recover. And if there was something good being written about it, then you're sort of trying to put together, well, how is it that my shares are falling?
Hope doesn't help you make money.
But how is it the shares are falling after they had an announcement that was positive, you know? How does that happen?
That's normal.
Yeah.
Because when's the best time to sell something?
Yes, when it's hot, especially when
everybody
low
else
liquidity
wants it.
type shares.
So that's so if you put out your best announcement, so the fund managers and the big players have all bought, waiting for that good announcement, those record profits or whatever else. So when they get announced, that's when they're selling. So.
And for me, the volatility that was in that share price was a bit of a warning as well. I mean, look, could she have predicted the way that it was going to unfold? I don't think so. But what does she do now? That's the question. It's trading down at $1. I mean, it's probably not worth much, is it?
It's probably not worth much. And we don't know the holdings, but then, as I said, you know, it should have been sold a long time ago.
Look, often when we've talked to people about their portfolios, this is in times gone by, and they've said that you've got a small holding left in a particular share, you know, sometimes people just leave it sit there and just hope that they come back one day. That's really all you can do.
There's not much more you can do, is it? But we've got a call, and now we've got another call, Janine. We've got Mac on the line, have we?
Yes.
Mac, welcome back to the show. I'm trying to remember, you're from Sydney, aren't you?
No, I'm from the Gold Coast.
The better
Dale.
place. Okay, I forgot about that. Cool. Mac, how you been? You hope you haven't got drowned out on the Gold Coast or anything?
No, we're in a good place. We haven't got drowned out yet.
Good on you, mate. Good on you. You've got a question for us?
Yes, it's about Rio. I tried a trend line approach on Rio. Everything went well until today.
Okay, good. So you actually own the stock?
Yes, I bought a small holding, and it went very nicely, and then today it dropped $5.
Okay, so we'll have a look at that and we'll help you out with that, Mac. Is it short, medium or long term for you?
Short to medium.
Short to medium. All right, Mac, thanks for calling in again, and I'm sure Janine's going to give you a great answer.
Now, Max said he just bought, didn't he? Did he or not?
Yeah, he bought. Well, he's trying to use the trendline approach, and he's bought it. He didn't actually. So
Okay, that would have
hasn't
really
bought it
helped to
long.
know. But he said it's dropped today, so I don't know whether he's bought it now or what he's tried to do. But I mean, it has dropped. It's not really concerning at this point in time. Looking at the chart, it's still part of a nice little move up, but there is a gap there on the weekly chart. There's a risk that it could fill it. I probably would be concerned about it if it went through this low. The week ending 25th of February, the low is $113.83. That would be the point when I'd be concerned about it. But right now, look how the stock moves. It does this on a weekly basis.
It does look really normal at the moment, doesn't it? So dropping, it's about percentages, not the number, the dollar, because what's $5 on a $130 stock?
Well, that's true.
It's not a lot in terms of percentage terms. So at the moment, it just looks like it's trending along normally. So I wouldn't be too worried about it, Mac. Hopefully you're enjoying trend lines on weekly and monthly charts, not daily too, Mac.
All right, good to clarify that. We have another caller on the line. Gee, the lines are running hot.
Good.
Dave. Hi, Dave. How are you tonight? And what's your question for us this evening?
Yeah, hi, Janine. Hi, Dale. I bought into GNC about 4 weeks ago for $8. I thought I saw the buy signals at that time. So I bought in. Target is around about $12, and the time frame I was hoping about 6 months, and a stop loss of about $7.40.
Wow, you've just blown me away with your words. Just the fact that you've got this plan, this is what I've done and this is what I'm looking for.
I've been reading the book, and I'm sticking to the top ASX companies. Also, the fund. This looks fairly good as well, being wheat. With the war, etc. I want to get your thoughts on a technical analysis.
Okay. Excellent, Dave. Thank you so much for your question. I hope that you're safe up there and well.
Yeah, and love your show. Thank you.
Thank you. Bye for now.
Geez, you're nice to Dave. You don't give me compliments.
Oh, my goodness.
God.
Do you think I should pay him a compliment?
Just talk about great.
That would take the fun out of it.
I'll go and cry in my soup or something. Cool.
All right. Dave had a good question.
He did.
Now, GrainCorp is an interesting stock, isn't it?
Yes.
Extremely volatile, but look what it's done. That's amazing, isn't it? Absolutely fantastic, the trend that we're seeing on the share right now. Short term, there's some risk there.
Yep.
Downside risk. It's just taken out this recent high, which is a positive thing because that shows the trend is continuing to move up. But, after a big move like it's had, so in that week, that 1 week here from the open to the high, we've had a 12% increase. So you'd expect after that quite often you'll see the stock trade sideways. You see that same sort of thing happened here. It'll trade sideways. If it's going to go up, then you will see it not take out the lows of these 3 bars here. So the real risk is whether it comes back and takes out the low of 773. If that happened, then I'd be a little bit concerned about this share. But right now, there's nothing to be too concerned about it. I'd just be watching carefully, and it's great that you've got a stop loss in place. That's what it's all about. Well done.
So you think, oh, well done. Geez, I'm looking forward to her giving me thumbs up, Dave, too. So I might give her a stop tomorrow, okay? But thanks for your call, Dave. And if you do want to call us, pick up the phone now and dial 92909988. But our next email we've got is from Dan, who says, "Hi, Dale, just wondering if you could take a look at Telga Group. They are a graphite mining battery company based out of Sweden. I've been watching the company closely over the past 12 to 18 months, and they seem to keep hitting all their fundamental goals as a company and progressing well through all of their company announcements. Now, the share price seems to be very news sensitive. Just wondering if you would be able to take a look at it on the charts from a technical view, and at what price level do you think would be a reasonable entry point? Regards, Dan."
All right.
Graphite's a good... You need graphite in lithium batteries and everything else.
Okay, so it's a good investment from a fundamental perspective.
Yeah, I like it.
Good area to get into.
Whether I like this stock or not, it's a different thing, but it's an area we should look at.
What do we think of announcements?
Yeah.
I wasn't expecting that sort of sound effect. Okay, next time, can you just let me know that you're going to do that?
I'm supposed to be professional.
Perhaps ask one of the guys to create a sound, like a drum or like a tingle or something, not
I just think
a raspberry.
Better, doesn't it? Like announcements.
Jeez. Oh, okay.
And it may be hitting all its targets, but it doesn't necessarily mean the share price is going to rise, does it?
That's true.
So it really doesn't.
Look, announcements don't mean much, obviously. You gathered that point there. And we're seeing the share prices pull back. So what does it mean? Let's have a look in percentage terms. This recent move, it's been down 40%. So it can't be all good news, can it?
No.
So look, it's volatile. It would really need to trade back above about $1.75 or thereabouts quite strongly before I'd even, be thinking that this is going to rise.
So it's consolidating, distributing right now at the moment. I'm not comfortable in giving him a price. I just don't like.
The risk is to the
whatever
downside,
price I give
isn't
him
it?
is probably going to be wrong. What do you think?
Well, what you're saying is the risk is to the downside with it.
Yeah,
Is that
the
what
risk
you're
is to the downside. So it could just I might say, hey, look, if it goes over $1.60, it might be a good one to look at to get into. But in the next
That's
week,
too
it could
tight
go
for me. I'd rather
it could go
give
to
it more room to
$1.20,
move.
$1.10, $1 from where it is right now. So yeah.
Okay.
I would just keep watching it, mate, and it needs to really show some signs of breaking out of that sort of consolidation place before I actually get into it. But I think, Janine, we've got a caller on the line.
We do.
I believe it's Ray, or is it? Is it Ray?
Ree?
It's Ree. Hi.
Ree, how are you? You must be a good-looking lady, I tell you what, just to get on this show and talk to us.
Oh, well, I'll take that.
You can take it. You have a question. Where are you from, Ree?
I'm from Tomarong. It's a little village just south of Nowra on the south coast of New South Wales.
Sensational. Beautiful place. Beautiful place down that way. And have you got a question for us, Ree?
Yeah, this is a little left of centre.
Yeah.
I've been watching with interest the wheat commodity.
Yep.
Given what's happening in the Ukraine, there's a lot of belief to suggest that Australian wheat will actually rise quite significantly this year. I'd like to know your thoughts on that.
Yeah, so I think it's a really, really good question, Ree, because obviously the Ukraine produces a lot of wheat, and obviously it's going to be a lot of disruption over there, so Australian wheat becomes a hell of a lot more attractive. But let's go and have a look at the chart. But thank you for calling.
Yeah, thanks so
We don't
much
get
for
enough
that,
girls,
Ree.
do we?
No, great to have more ladies calling in. Good on
Especially
you.
lovely ones like Ree.
Yes, that's right. So looking at wheat, I've got the wheat futures
Fantastic.
up here on the chart, and we can see that, oh gosh, if you'd bought into something that replicated the wheat futures, you'd be up 46%. There was a nice little consolidation there and it broke out. But would you be looking to invest in that, in something that replicated the wheat right now? I'd say probably not, given the current rise. So do you think that it's all over, it's done, the rise is done, or have we got more to go because of the conflict situation?
Look, I think I'd be looking at things, some of those stocks that are around the wheat, because obviously you've got GrainCorp. We looked at GrainCorp, but there are other companies around that area in that commodities around those, not just wheat too, because Ukraine has a lot of different grains that they actually do produce, and they're a big producer. But so is Australia. So therefore, what other grains out there? Is it barley? Is it corn? Is it something else?
So in theory, that should be great for Australian growers, shouldn't it?
It should be great for Australian growers.
But we've had all the floods.
Correct.
Makes it hard. So hard for those people.
But has it been flooding where we do all this?
I mean, how frustrating is that to have wheat and then it be in the floods and then not be able to get those prices for your wheat now?
That'd be just
heartbroken.
Heartbreaking. But hopefully they've locked in all their contracts and everything else anyway and insured them.
Yeah. Look, I would say I'm just interested in this chart just because previously the wheat price had come up to a high here and then fell significantly. So does that mean the conflict's going to be short-lived? Is it going to keep going for a long while?
Look, I reckon it's at least a 50-50 bet the conflict will be short-lived, and there's a good probability that it'll be over soon.
Okay.
Cool.
Well, look, if not, it's already broken that high, so there's a potential for it to come back and then take off through the high again as well. We'll just keep watching. All right, we have another caller, and it's Tom. Tom, good to have you on the line tonight. How are you, and where are you calling from?
Good, thanks. How you going, guys?
Great.
I'm from Perth.
Perth. Oh, wow. Look, excellent. Are you in the mining area, or what area are you in terms of employment?
Yeah, I work in oil and gas myself.
Why isn't it every second person we speak to that's in Perth is in oil, gas, or something along those lines?
Oh, no. Yeah, it's pretty big over here. Probably leads me into my question, actually.
Great. All right. Shoot, what have you got for us tonight?
So I guess my question is around the stock Triple O. I bought this stock at $3 back, futures contracts went negative. I just thought, why not? At the time, didn't really have a lot of cash to put in the market, so I just thought I'd buy a couple of grand of that. But over the past 6 months, I've been studying the diploma through you guys, and now I'm sort of looking to finishing Module 5, so I'm kind of looking at the stocks I do have and what to sell and, maybe what to potentially buy more of. I mean, with this stock, it's not highly liquid, as you can see, but I guess it's not even anywhere near 25% of its all-time high, all-time range. I'm just wondering what you guys think at a high level potentially we could see based off the current oil price and where it was back in 2014 when this stock was a different level too.
Great. Look, that's an awesome question, and congratulations for getting to that point. Pardon?
It's an ETF.
An ETF, yeah, that's right.
ETF, correct.
Yeah, so look, we're excited for you and well done in getting to that point. And obviously it's paying off for you because you've picked something that's doing fantastically well. So, look, I would just say you'd be staying with this one until it tells you otherwise. It looks fantastic. There are some really important levels that I can see overhead. So the upside, it's not done yet.
No, I don't think it's done by any shot at the moment. I think you've done really, really well to pick this one up. Obviously, he's picked it up before he started our course, and it may have been a bit of luck, but managing it all the way through.
And being able to stay with it, it's important.
Being able to stay with it, I think he's done really, really well. So at the moment, I don't see any signs. I mean, obviously, it might come back for a couple of weeks, but I wouldn't let that scare me at all.
Yeah, there's some really good rules that work well on this one. So if you haven't found them yet, just stick at it and keep doing your analysis and you'll find it.
Oh, okay, stick at it.
Stick at it.
That's all you've got?
That's all I've got.
Cool.
Use the oil. You always look at the underlying as well. That's really important.
Well, it is, and because oil's doing well, energy's doing really well. So look, I do love the stock, and I think he's done really well, and I think he'll do even better out of that. But we do have another caller on the line. I believe we've got Daniel, have we?
Yes, that's correct.
How are you, Daniel? Where are you from?
Hi, Dale. Hi, Janine. Hi, team. I'm from Sydney. I'm a 23-year-old young investor. I'm just starting out in the market. So
fantastic.
Just learning my trade, learning the stock market in general. And I've started to stick with the top ASX top 100. And I just wanted your opinion on the stock Cochlear in the healthcare sector. Okay.
Are you looking short, medium, long term?
More longer term.
Okay, and what interests you about Cochlear?
Well, because it's in the healthcare sector, which is rather, it's deemed to be, I guess, defensive sector, and starting out, I think that would be a good option for me, just learning, I guess. And it's a proven performer over the last, I guess, 5 to 10 years.
Fantastic. Well done, Daniel. Congratulations, 23, doing what you're doing, and you just made, I think he blew a lot of the older people out of the water. What do you think?
That's right. They're probably thinking, I wish I was 23 again.
Well, I think he's smart at what he's talking about and how he articulated everything. I think that's very, very good, very impressive at 23. I was chasing girls and surfing at 23.
Okay, we're not going to comment on that. Could go anywhere. All right, now looking at the chart of Cochlear for you, Daniel, you can see...
It was a lifesaver though.
You can see that the stock has really traded sideways largely in a really volatile fashion from 2018. So at the moment, we're just watching this one. It's unclear at this point really the direction and that's really the point of this. So there's significant resistance overhead, but there's also really strong support underneath. So I guess I'd just be patient and wait for that. And the most important thing you can have with a stock like this is it's got to be going up. You've got to confirm it's rising because it can turn really fast. I mean, just have a look at these really strong falls. It was 30% here. We had a bit more in COVID and then another recent decline. So it's really important to get direction right.
It's almost going sideways, hasn't it? So just wait for it to break out of that. But look, I think I'm congratulating him anyway.
Very good. Our next email is from George. Hey, Dale and Janine, and as always, the legendary team. Thank you. Calcium Group popped onto my radar again and appears to be consolidating around the $6.50 to $7 mark as per November to February last year. After being quite flat for many years prior to the event, we longer mention in early 2020 its personality has changed markedly, with tourism and transport almost back to some semblance of normality. Would you please cast an eye over it with some thoughts for the future? plenty of downside towards $6, but some room up to $10 also. Much appreciated for your weekly market insights and variety of trading topics. Thanks, George. Thank you for that, George. That's a good one. All right. So at the moment, this stock, Calcium Group, is actually trading. He's right. There is a really strong support level around these levels where it's currently trading. And that is exciting from a stock point of view, because once you see a stock doing that sort of thing, it's much easier to understand, well, what are you doing? Because if it continues to fall away and it takes out that recent low, you know, you're not going to be buying it. You just sit there and wait for eventually it to be bottomed out and let the suckers try to take it. And then on the upside, if it goes through this high here, the potential is there for it to keep going up.
But at the moment, it's just a bit of indecision at the moment, because as you're saying, it could go through. If it goes through that low that you mentioned, so it's probably going to hit sort of $4 mark.
Oh, it could go just to $5. Like it might not head all the way to that $4 mark. It might just head down towards the $5 mark.
Okay, and if it goes through the high where you've got your pointer and everything else, it could do
back
quite
up
well.
to around that 950.
I do like it.
Yep.
Well done.
Good choice.
Very, very good. Okay, well, that is our thoughts from on KLS. Now, if you did call into the show and you missed out on us answering your questions, then watch our show next Tuesday between 7 and 8 p.m, as we'd love to chat with you. Now, if you are not able to watch live, you can also email your questions ahead of the show. You can do this by sending your email to info@wealthwithin.com.au. And remember to include Wealth Within Live into the subject line.
Also, we would really appreciate your support for what we share each week. You can simply do this by subscribing to our channel. So if you have not done so yet, please hit that subscribe button now, and also give the show the big thumbs up. Well, that is it for tonight's show. We do hope you've enjoyed what we presented tonight. We've so enjoyed receiving all your emails and calls, and thank you, a big thank you to those who actually did call in. We love the opportunity to chat with you personally.
Okay, and as always, we thank you for joining us, and we do hope you have a fantastic week. For now, goodbye, good luck, and good trading.